Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we will be discussing one question where we are required to find out profit as per financial book and cost book and to reconcile them. Let us read the question. From the following details of KT and company, compute profit as per profit and loss account as well as per cost sheet and reconcile profit between cost sheet and profit and loss account, showing clearly the reasons for variation in two profit figures. Sales 20,000, purchase of material, it will be direct material, closing stock of material, we have to deduct from direct materials, direct wages, that is direct labor, indirect wages, factory overheads, indirect factory expenses, factory overheads, bad debts. This will be recorded in profit and loss account debit side. It is recorded in financial book, but it will not be recorded in cost sheet. Here in this case, bad debts can be assumed as finance expense, that is due to mistake of financial department, credit was given to wrong customer, therefore business has suffered a loss of bad debts. If we assume bad debts to be sales expense, then it will be treated as selling overheads, then it will be recorded in cost sheet. We are required to record a note below the question whether we have treated bad debts as a financial expense or sales expense. Interest on overdraft. This is the interest is a financial expense. It will be recorded in profit and loss account, but it will not be recorded in cost sheet. Profit on sale of asset. This will be recorded to the credit of profit and loss account. It will not be recorded in cost sheet. Selling expenses, selling overheads, distribution expenses, selling and distribution overheads. In cost sheet, manufacturing overheads, factory overheads are recovered at 300% of direct wages. Selling overheads recovered rupees 1,500 and distribution overheads recovered 700. So in cost sheet they have given different values for factory overheads, selling overheads and distribution overheads. Let us first prepare profit and loss account to find out profit as per financial book. Sales rupees 20,000, it will be recorded to the credit of income statement. Purchase of material rupees 3,000, this will be recorded to the debit of profit and loss account. Closing stock of material rupees 500, this will be recorded to the credit of profit and loss account. Direct wages, this will be recorded to the debit of profit and loss account. Indirect wages 500, this will be recorded to the debit of profit and loss account. Indirect factory expenses rupees 2,000, this will be recorded to the debit of profit and loss account. Bad debts rupees 100, profit and loss account debit. Interest on overdraft rupees 50, profit and loss account debit. Profit on sale of asset rupees 1000. Profit and loss account credit. Selling expenses rupees 2000. Distribution expenses rupees 1000. So we have recorded all items for profit and loss account. Let us find out profit as per financial book. So profit as per financial book is 11,850. Let us find out profit as per cost book by preparing cost sheet. Now we will preparing cost sheet to find out profit as per cost book. First we will consider direct material. Purchase of material is given 3000 and closing stock of material is given rupees 500. So direct material consumed is rupees 2500. Direct wages, direct labor rupees 1000. So we arrived at prime cost rupees 3500. To this we will be adding factory overheads. In cost sheet, factory overheads, manufacturing overheads recovered at 300% of direct wages. So manufacturing overheads are rupees 3000. Works cost rupees 6500. Selling overheads 1500 and distribution overheads 700. There is no administration overhead specified. So works cost itself will be cost of production and cost of goods sold. Selling overheads as per cost sheet they have given 1500. Distribution overheads 700. So total selling and distribution overheads 2200. It will be added to cost of production. Total cost or costs of sales 8700. To this we are required to add profit to arrive at final figure of sales. Sales we are required to take same rupees 20,000. So profit as per cost book is 11,300. Let us prepare a working note to understand the reasons for difference in profit as per financial book and profit as per cost book. We can compare every item of profit and loss account and cost sheet. Sales as per profit and loss account is 20,000. Sales as per cost sheet is also 20,000. So there is no difference in sales. Closing stock of material 500. In cost sheet also we have considered closing stock of material 500. Profit on sale of asset 1000. This is recorded only in financial book. So this item is one of the reason for difference in profit. Purchase of material 3000. It is same as per cost book. Direct wages, it is same as per cost book. Indirect wages is a factory overheads. It is 500 and indirect factory expenses 2000. So as per financial book, factory overheads are total 500 plus 2000, 2500. In cost sheet, factory overheads are rupees 3000. Bad debts rupees 100. This expense we have only in financial book, not in cost book. Interest on overdraft. This expense we have only in financial book. Selling expense as per financial book 2000. As per cost sheet, selling expenses 1500. As per financial book, distribution expense 1000. As per cost book, distribution overheads are 700. So here we have analyzed all the expenses items which are responsible for difference in profit as per financial book and cost book. Factory overheads 2500 as per financial book, as per cost book 3000. Now what we are going to do, from first column we are going to deduct second column, 2500 minus 3000. So we get minus 500. 100 minus 0 plus 100. 50 minus 0 plus 50. 2000 minus 1500 plus 500. 1000 minus 700 plus 300. Profit on sale of asset 1000 minus 0. It is income plus 1000 we have wrote. So this is the analysis of expenses we have done. Now this difference column will be using to prepare actual profit reconciliation statement. This is the format of profit reconciliation statement, particular and two amount columns. We are going to start with profit as per financial book. So finally we should arrive profit as per cost book. This format is similar to preparation of bank reconciliation statement, where we start with balance as per passbook and we arrive at balance as per cash book. Now here we have started with financial book. Therefore, when we have prepared our working note, we have taken first column as financial book. This point has to be noted. Our statement is starting with financial book and ending with cost book. Therefore, in working note, we have kept first column financial book, starting point of reconciliation statement, and second column is cost book. If we start with profit as per cost book, in our working note, our first column should be cost book and second column should be financial book. Now certain items are required to be added and certain items are required to be deducted. Here I am giving you simple trick. In difference column, if you find sign minus, then in reconciliation statement you have to minus this item. If in difference column, if you find sign plus, in reconciliation statement you are required to add that item. That is a simple trick. Only in case of income, we are required to reverse the sign. So here we got plus 1000. So we have to take, in solution it is as what? Minus. If we have here minus 1000, in solution we would have taken plus. Now factory overheads, it is minus 500. So it is less. Bad debts plus 100. Interest on overdraft plus 50. Selling expenses plus 500. Distribution expenses plus 300. Profit on sale of asset minus 1000. So we have recorded all the items which are responsible for difference in profit. Now we'll be taking addition of all those plus items. It is 950. It will be added to profit as per financial book 11,850. Now we'll be taking total of minus items. It is 1500. This will be deducted from 12,800. So it will be 11,300 final answer. This should be profit as per cost book. We can verify here profit hour as per cost sheet was 11,300. Final answer we got here 11,300. That means our profit reconciliation statement is correct. It is showing profit as per financial book 11,850. After doing all plus and addition and subtraction, we got profit as per cost sheet 11,300. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.